All right, cool. So another topic of the day, call it, for in the investing world is really ESG, green investing, sustainability investing. I think everybody's wondering what to call it because nobody knows really how to define it completely. That's accurate, no?
That's accurate.
You know, if somebody said to you, I'm thinking about green investing as an opportunity, the question is it?
It definitely is. I mean, I think you're seeing a huge amount of capital moving that way globally. You know, when you look at green investing and what it is today, I think you're seeing a lot of repackaging of existing financial products, especially in the public securities world. And we've talked about that with our articles where it's not really an honest reputation of what green investing is. But I think the fact of the matter, if you look at the actual data, is that there's a tremendous amount of investment capital out there that is looking for the correct outlet for green investments. That's a fact.
You know, I think maybe the best way to shape the conversation and try to define these ourselves, what would be a green investment? What would you'd say, okay, this kind of fits this mold of sustainability? I think it's going to have a mixed, call it market reputation of, okay, you know, a sustainable investment is one where a company breaks off a piece of profit and gives it to charity.
Yeah.
Or it's going to be the obvious one of it's focused on climate change.
Yes.
That one's obvious. But what about kind of like and the first example I gave is probably not even really included.
Yes.
But what would be some examples of, call it green or sustainable or ESG strong businesses
Sure.
that are going to be attracting some of the opportunity
Sure.
we're talking about?
Well, first to touch the one that's not included, I think that's readily prevalent in the investment world today, and I think you always need to touch on it. And the example I always give to an investor is, let's suppose I'm an arms dealer involved in the black market, and I give 10% of my profits to the Red Cross.
Yeah.
Am I an ESG company now? Am I a green company? I would argue that no, you're not at all.
Yeah.
You're not doing anything in the green space. You're not doing anything in the ESG space. You're just combining nonprofit elements with for-profit elements, and that's not a green company. And I think a huge amount of companies are doing that today and calling themselves green, and it's not appropriate, for sure. I'd say for ESG companies and green companies that are going to get traction, they need to solve real problems.
Yeah.
I think the most prevalent one that's going to get capital thrown at it, if any founders, any management team have great ideas, is really around climate change. That's where the vast majority of capital is going to go. And what are they looking for? Guys that have a business that adapt to climate change, right? And say things like in agriculture, what we do. In agriculture, anywhere in the world, you're going to have to adapt to climate change. There's no climate scientists that are coming out and saying, hey, there's no such thing as climate change, so the ag businesses don't have to do anything. Says zero CEOs of any ag business anywhere in the world, right? So they need to run their businesses in a more sustainable way. That's adapting to climate change. And there's going to be a lot of capital that flows into those businesses. The other ones are things that try to retroactively move or migrate climate change away from disaster. Things like clean energy businesses, whether you're doing, seawater energy, or you're doing solar energy, or you're doing I've seen things like algae-based energy companies. They're actively trying to migrate over to things that hurt the environment, like coal-based energy, into a more sustainable energy source, and that will receive a tremendous amount of funding if the financial model is financially viable. Remember that these are businesses, they're not nonprofits or research projects.
Yeah, that's something we'll touch on later. Basically, can you sacrifice financial return because you have a green mission and still get the capital you need to basically make that mission possible? So we'll hit on it in a bit, but I think it's good to talk about the size of the opportunity and the amount of money that's being directed into this green investing space. The Fortune article you sent me talks about the Glasgow investment conference last year, where investment funds that control $130 trillion of assets were represented at the conference. And a large focus of all of those investment arms is getting more access to green technology, green companies, sustainable investing. And what we've seen, I mean, anybody can really do the math, it doesn't take them shifting their portfolios 100% away from oil and gas. It doesn't take them moving everything into climate change focused technology. If you break off a piece of that, you're going to have major capital moves, and there's going to be people benefiting substantially from an investment perspective.
Yeah, it's exactly right. And we were talking about $130 trillion to take a step back. I mean, it's just like numbers on a screen right now.
Yeah, it's almost meaningless.
But if you take a step back, so we were looking at this yesterday, and you say, well, what's the market cap of all the publicly traded equity securities in the world? It's like $94 trillion of the data that we pulled up yesterday. So you're saying, all right, there's 130 trillion looking for sustainability and ESG green focused investments. And if you bought every publicly traded company in the world, you're at 93 trillion. So you're at like a 50% premium above public markets. The amount of demand is definitely there. I think the issue really with placing it is where are the portfolio companies that can do it. You know, I've seen a lot of, not critics of ESG, but somewhat critics and just rational, investment advisors come out and say, you need fossil fuel companies and whatnot to help move some of this money, because the amount of capital there, it's just not possible. You can't buy, there is no equivalent the size of Exxon that's a pure green energy company. Right? You can't move $130 trillion like this, right? We're looking in Colombia, where we're recording from, we're looking at, GDP south of $400 billion. So you're talking about literally Adam Smith's wealth of nations that we need to move an entire GDP towards green investments. And I mean, and it's not just a process, it's like just a complete movement. Like it's almost like a war of capitalism and moving that money.
Yeah. People may forget about like the probably tremendous burden of having to find a home, a productive home for all of that, for all of that money. But it does create opportunities in the sense for the person that needs to place $1 million or $10 million to get in on the ground floor of some of these ag tech companies or other companies that are making this transition possible. And they can be the early stage investors for these companies that are building, and then in their Series C, Series D, pre-IPO rounds are getting the $100 million, $1 billion, whatever it might be, from these large financial institutions we're talking about. So there's opportunity for quite a few folks if they grab it.
I would say the biggest opportunity for high net worth investors really is an early stage. Whether you're talking about ag tech or let's say clean technology related construction materials, you're talking about renewable energy, BlackRock's fund managers, they don't want to go out and write $5 million checks. And in fact, they just won't do it. Most of them aren't venture funds, right? They're late stage growth funds, whatnot. They need to be writing 50, 100 million plus checks. The thing is, when you're talking about 130 trillion theoretically on the sidelines, they need to move a tremendous amount of capital. But to find individual portfolio companies to invest in, largely, let's say in a seed or venture capital type of mindset, not a lot of funds are set out to do that. For individual investors who don't mind taking a little bit of risk in getting in early stage companies, when the companies become successful, the outlet is clear. There's a tremendous amount of capital, and at those later stage financing, whether it's a pre-IPO round, IPO round, those bidding prices are going to be super, super competitive. Expect hugely heightened valuations. So I would say on a macro thesis basis, purely the amount of capital that want to go into these companies and the limited amount of portfolio companies that exist today, the opportunity is massive.
What about the investor that's just looking for the most possible return? Should they look at green investing, ESG investing, again, however you want to name it, sustainability investing, but like you said, businesses that are focused on these climate change and global problems. Is that a good financial bet?
Yes.
Is it a financial and sentimental bet? I mean, where should the person who wants to make the most money possible focus their attention? Should green investing be part of the discussion?
One answer is yes, it definitely should, but also take a look into what the company actually does. Like, I think a lot of what I would call is like ESG fraud is readily prevalent today is going to get called out. And whether it's the SEC's new regulations that are coming out, or just active investors saying, you're not doing anything that you guys are talking about. This is complete mismanagement and you're misaligning information to key stakeholders, you're gonna get burned. And I think a tremendous amount of companies that say they're ESG focused or green focused, they're not actually solving any of the world's pressing problems, not even in a little niche way. They're just sugarcoating everything or greenwashing everything. So I would say, the core thing is it a fundamentally sound business? Like, remember, this is still capitalism. It still has to be an operating business and you still have to make money, right? You still have to make profit. If you don't do those things, it's going to be very difficult for me to tell you, yeah, you should invest in these businesses that will theoretically never make money. If you're only looking for social good, there's a tremendous amount of nonprofits out there that do great work, and they're not conflicted. They're not conflicted in a capitalistic world. They can spend it on pure research and development, or they can spend it on pure social good. But to confuse the two, I think, is a misalignment of how the system really works.
And to fix all these problems that we're talking about, it's going to be expensive.
Yes.
So the companies that need capital to be able to solve these problems are, in most cases, not going to be able to get it if it's not a highly profitable, competitive investment opportunity for the capital allocators who are looking at these opportunities.
That's right. I mean, to me, capitalism really hasn't changed as a result of green or ESG investing. They're just taking into account the rational stakeholders that already exist. So if you're a stakeholder, take what we do at Coffee Company. We want to run sustainable businesses that we're proud of. But remember that a coffee end client is an industry that's unique, that your end client is wanting you to be transparent. They're demanding that you run sustainable practices. They're demanding that you run ethical businesses, something that we want to do anyway. But I would argue that if we didn't do it, we're out of business in 10 years, no matter what. And I think you're going to see certain industries where the stakeholders are already demanding that you do these things. So it's going to be the first company that meets the needs of those stakeholders, and they're going to make money doing it, right? And that to me is rational behavior in a capitalistic market. And I think a lot of industries are going to push for it. And I think more and more stakeholders these days, whether you're an employee, whether you're a client or customer of a product, whether you're a management team member, or whether you're just a bystander, you want to see green practices. And I think you're going to demand it from more and more companies, and companies need to adapt, or their competitor will, and the ones who don't will die.
It cuts both ways too, in the sense that the people who can, I guess, call it win this ESG battle and really do the things that are useful from that perspective are going to have a lot of capital coming to them. Definitely. They're going to have rising market valuations. Investors are going to, I think, pick the winners and ride the winners pretty hard. And we're seeing what's happening to the losers.
Yes.
You know, I remember a year ago looking at the IPO documents for Oatly, remember? And reading to you, you mentioned greenwashing as a topic and basically a new cause of action or reason the companies are getting sued now.
Definitely.
And reading through their disclosure documents, and it's basically, you know, our mission is to be a sustainable company in basically all aspects of the world in which we do business.
Yes.
Pretty general.
Yes.
Pretty hard to quantify.
Yes.
Very easy for somebody to poke holes in.
Definitely.
Right? 101 times in the disclosure documents they use the word sustainability, and their stock price is down 80%.
Yes.
So, you know, there's litigation going on. I don't want to bully them, but it shows investors of, you know, don't just kind of take things at face value. I would say it's better to find companies that have a very specific mission.
Yes.
And ESG impact that can actually be measured.
Definitely.
Versus the holistic, we're going to do everything great for everybody all the time.
Agreed. I think you always have to have a niche where you're special and focus on those companies. You can't be everything to everyone, right? And I personally love the litigation and stuff that's happened at some of these public companies, because to me, it goes back to the old way of doing business. Say, do honest business, do it the right way, do things you're proud of. And if you don't, guys are going to come for you. right? So I personally love the shareholder activation as guys are coming out and saying, no, this isn't legitimate. This is not truthful. And I think you're going to see more and more of it. You know, I think the public, and especially the investment public, they're fed up with being fed lies about sustainability, where basically public companies are doing business as usual, and they're backing into how they've done sustainable practices throughout the entire 130 years of their history, or why they started the company and they wanted to be sustainable from the start. You know, that's just not truthful to your investment community, and I think they're getting called out, and I think it's great.
It's fundamentally just goes back to a question of fraud.
Yes.
And
yes.
Playing on the fact that so many people want to be involved in these impactful businesses that are tackling things like climate change, or if not tackling directly, helping to create a more long-lasting planet.
Definitely.
And at the same time, people just say, okay, well, they're saying they're doing it. I know that people are going to be interested in this if I use the right buzzwords.
Yes.
But I'm not really actually doing this. Regulators are focused on it. I think the investing public is starting to see it.
Yes.
But you know, if you're an investor looking at these opportunities yourself, you still have to do your own homework, and it's easier to stay narrow.
That's right. And I think kind of a recommendation for the high net worth audience is, you know, really look at those earlier stage companies. Yeah. I would say once companies are public or they're pre-IPO, unless you're coming in with huge checkbooks to compete with the BlackRocks of the world, you're going to have a really difficult time finding any arbitrage, right? It's going to be really difficult. But if you can kind of dig in the weeds a bit on early stage on a lot of these ESG and green investments, I think you're going to see so much growth over the next however many years that you and I are alive. Yeah. That's the only sector that you theoretically need to kind of partake in, and you can make tremendous returns.
Yeah. It's also very challenging if you're a public market investor to get your questions answered. So if I want to know, you know, just like we see with the Green Coffee Company, you know, 250 investors, a lot of them come down here, see the operations. Probably not a lot of public market investors going and looking at, you know, ConAgra Foods supply chain, yes, or being able to call and get answers to their questions to find out whether these opportunities are real, whether the sustainability initiatives are real, or whether what people are doing is just completely falsified.
That's right.
It's another reason why early stage private market investing has really, I think, some great appeal.
Definitely. I mean, kind of sum up.
Yeah.
I mean, the theme is, I would say for the two of us, there's almost an unlimited amount of capital. If you're running honest businesses in the ESG and green space, those companies are, from a macro perspective, they have all the tailwinds you could possibly do to go huge. From an individual market perspective for individual investors, I would say look at early stage portfolio companies, or obviously private equity funds that focus on early stage companies for a diversification play. You know, and do we see any changes in the macro market? I think all the stuff related to SEC disclosures are going to be huge. I think more shareholder activism is going to happen. And in public markets especially, a lot of those guys that are saying they're green are going to fall. Yeah. I think they're definitely going to fall. So really the opportunity is in the private company space. The public company space, guys that are operating in the green, I think you're going to have a really tough time identifying truthful ones.
Yeah, I think you said it well.
Thank you.